This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone. Live from New York, Bloomberg Studios, Bloomberg headquarters, the mothership. Call it what you will. It is Bloomberg Businessweek Daily. I'm Tim Stenovec, along with Norah Mulinda on this Thursday, August 21st, 2025. Usually we say Fed Wednesday. I think we can call this a Fed Thursday, though, because the Fed is kicking off its economic symposium in Jackson Hole. It's the central bank's flagship event. Our focus is certainly there this hour. In just a few minutes, we're going to hear from Tom Keene. He's on the ground there on what to expect from Powell tomorrow. The latest also on the DOJ, urging Powell to remove Fed Governor Lisa Cook. Norah, I think that's what's going on with today's trade. Everybody's just waiting to hear from Powell tomorrow. Absolutely.
We're seeing definitely a bit of caution here. We're looking at, our fifth straight day of losses, rather, if we are to see these declines hold here. So it really is seeming as though people are really trying to figure out what's going on. We've gotten a lot of those retail data. So we've been seeing a lot of things from earnings from a lot of just different companies, and we're seeing investors just digesting it, trying to figure out where to be here in the market. All right. Well, speaking of trying to figure out where things are going, we're going to speak to the CFO of Cava in just a few minutes. This after just earlier this month, last week, the company saw its worst stock rout ever after they reported earnings. Concerns about the consumer. Also, rare earths, that's coming up a little later. We got the CEO of Guardian Metal Resources joining us as well. All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, a check of the day's trade and top business stories. Here he is, Charlie Powell.
Hi, thank you very much, Tim. Here's what's going on. The Dow, the S&P, NASDAQ, all in the red right now. Caution is prevailing ahead of Jay Powell's speech tomorrow. Stocks falling, bond yields rising as that key factory report this morning raised concern that inflation pressures could dim the outlook for rate cuts. The S&P down 21, drop there of 0.1%, 63.74. West Tech, we've got the Dow Jones Industrial Average down now by 150, a decline there of 0.3. Again, the S&P down 0.3%. Nasdaq Composite Index also down 0.3%. Russell 2000 Index of small cap shares just turning higher, looking at a gain right now of 0.1%. 10-year 4.32% with a 2-year 3.79%. Gold down $11 the ounce, a decline of 0.3%, while West Texas Intermediate crude is up 1.3%, 63.53 for a barrel of WTI. Boeing shares lower now by 0.2%. Sources tell Bloomberg Boeing is heading closer to finalizing a deal with China to sell as many as 500 aircraft. Those sources say the mega sale to China is contingent on the two nations diffusing the trade hostilities that hark back to President Trump's first term in office and could still fall apart. A New York appeals court has struck down a $464 million fraud penalty against President Trump and his company. New York Attorney General Letitia James says her office will challenge the ruling at the New York Court of Appeals, stating that, quote, yet another court has ruled that the president violated the law. Recapping, S&P down 21, down 0.3%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that, Charlie. Appreciate it. All eyes on Jackson Hole as the Fed kicks off its economic symposium. It's the flagship event for the U.S. Central Bank. Fed Chair Jay Powell set to speak tomorrow. Before that, former Federal Reserve Governor Betsy Duke was on Bloomberg Surveillance earlier today. She gave her expectations for the chair's speech Friday at the symposium.
Jay Powell, in terms of his legacy, is looking at what happens to his mandate, what happens to inflation, what happens to employment, and how well does he manage that. It's not any single speech. He's going to focus primarily on the decision framework and not give any indication of where he's leaning for September. Inflation expectations are going to be the key over the next year or two. If inflation expectations get out of line, then the Fed will be very concerned.
That's Betsy Duke, former Fed governor, on Bloomberg Surveillance earlier today. Joining us now from Jackson Hole, Wyoming, is Bloomberg Surveillance co-host Tom Keene. Tom, the event, it's supposed to be about policy, about economics, about this economy, but happening at the same time, the Justice Department signaling possible plans to investigate Federal Reserve Governor Lisa Cook. How is that hanging over the event?
Oh, it's hanging over. It's the exact correct language. There's no question about it. You still have the normal cadence of Jackson Hole. For example, there's 6, 7, 8 papers that come out. Michael McKee prints them out perfectly, and he reads every page of the academic papers. Guess what? I don't do that. I'm talking to the reporters here gathered, and you're right. At the top of the pile of topics here is Lisa Cook.
So I spoke to Mike earlier. He said she's expected to arrive. She hasn't arrived yet. Does it take away from Fed Chair Powell's message tomorrow? Does it distract from what he says about this economy and what he indicates or not about September?
It's a really fair question. I don't think so. I think Michael McKee, who's better at this than I am, would say exactly the same thing. What is different here, and our Simon Flint in Singapore absolutely nails it in an essay today, what's different here is the hard facts of the moment are catching up with the chairman. I don't know if they're rewriting the speech tonight with the stars out above the Tetons, or maybe they're writing it on the airplane. But what is very clear here is the hard facts, as Mr. Flint says, have caught up. You have the economic data today. You got concern about inflation. And Tim, the number one thing I'm watching off the Bloomberg here is the 30-year bond. Once again, we're making a dash up near 5%. That's a kind of inflation whispers that have to change the speech.
Tom, of course, you mentioned the chairman will speak tomorrow at Jackson Hole. Can you just tell us a bit more about what attendees are really looking to hear from him?
It varies every year. There was one year here, I'm going to say 3 years ago, I can't remember, where we were prepared for a 15-minute, 20-minute speech, and I believe he spoke for 8 minutes. So every year is different. I think the pageantry will be here. There'll be an international audience here. Christine Lagarde or Mr. Nagel of Germany is here. Bailey of the Bank of England scheduled as well. But what's interesting is within the pageantry, what do you expect from a speech? And the answer is they'll be looking for certain nuances and certain single sentences that will be different. What you're not going to get a lot of is what's he going to do in September. That would be rude. He's not going to do that here.
You mentioned a lot of those international voices. I mean, the ECB, we've got Bank of Japan, emerging markets. How are they playing a part of the conversation this year in particular?
Norah, you know my theme. You're already stealing my theme as we go to tomorrow with Lisa Abramowitz. To me, the international angle here is the importance point. William Rhodes, Bill Rhodes of Citigroup, iconic at Citibank, it was called Citibank back then, had this great phrase, central banker to the world. He took it from academics. This is a Jackson Hole where Jerome Powell is the central banker to the world, is he defends delicately the way we've done banking for years, pushing against President Trump. The theme internationally here of central bank independence will be key.
I think also the theme of labor, Tom, and it's something that we've spent a lot of time talking about in recent weeks, especially since that shocking report came out earlier this month about those numbers for the month of July. And it's really shifted the conversation about what employment in the United States and what healthy employment numbers look like in the United States, where borders are closed, immigration, legal and illegal, is down, and growth among American families is not what it was a couple generations ago. What does that picture look like in terms of reshaping the American workforce?
Well, and reshaping the speech as well. It's a movable feast right now, Tim. The number one thing is we've seen a trend in the data. The conceit is labor data always lags. Okay, fine. And we've seen this trend, including continuing claims today. Bramo put out on Twitter, I was, stuck in an airport somewhere. Bramo put out on Twitter that great continuing claims chart, which shows this explosion up in the weekly data. That's the kind of tea leaves that gets a Fed to shift. President Trump wants them to shift quicker. And let's remember, we've got that jobs report early September before Mike McKee's in that press conference, September 17th.
Well, I want to just talk about the energy. I mean, you've been to so many of these symposiums. What's the energy like on the ground this year in particular?
Quiet. First thing I noticed when I walked in, there's a whole new quiet tone to it. Mike McKee and I remember August of '07 which was, I think, I'll say 7 days after LIBOR OIS went out 4 standard deviations. This place was chaos. My guess is a lot of people are coming in tomorrow morning, and tomorrow morning here at the Jackson Lake Lodge will not be quiet. There'll be a real turnout for the speech. With that said, it's one part academic, but it is one part about this attack on the central bank by President Trump.
Tom, I'm going to have to leave it there. We're going to speak to you throughout the next couple of days. Appreciate your time, and we're glad you arrived safely. I know it was a long journey to get there. Tom Keene, Bloomberg Surveillance co-host, out there at the Jackson Hole Economic Symposium. Stay tuned to Bloomberg for continuing live coverage from Jackson Hole throughout the rest of the week. Tom Keene and company are on the ground in Wyoming to cover the Kansas City Fed's annual Economic Policy Symposium. And highly anticipated remarks from Chair Jay Powell. We'll cap things off with a special edition of Bloomberg Surveillance. Tom, Lisa Abramowitz, and Mike McKee will all be part of that special starting at 9 a.m. Wall Street time on Friday. Well, also watching the Economic Symposium in Jackson is Alli McCartney, Managing Director of Wealth Management and Private Wealth Advisor with Alignment Partners at UBS. She and the team manage just over $1 billion in assets. She joins us from Rehoboth Beach, Delaware this afternoon. Alli, good to have you back on the program. What do you think Fed Chair Jay Powell will communicate tomorrow?
I think, as usual, he will probably not communicate exactly the things that the market is looking for. But I think that what he will communicate, you just spoke about briefly, which is this tension between the dual mandate, specifically that they are now looking more at weakening, softening data in the labor market than they are at long-term inflation expectations, which although Tom talked about the movement in the 30-year, seem to be quite consistent. The last thing I'll leave you with is to remember that last year was, in a sense, quite an epic meeting, and that was the beginning of the long-awaited pivot. I think that this meeting will be, in a sense, less revelatory than that one.
When we look at the market performance this past year thus far, it's up about, we have the S&P 500 that's up about 8%. Of course, that's a bit different from what we saw of the past couple years where we were seeing double-digit gains to end the year here. So what do you think the market really needs to hear to maintain this momentum here as we go into the second half of this year?
So I think we're in a bit of a waiting game, right? That's a normal thing in late August. Volumes are really low. People are on vacation, less trading. We also happen to be awaiting Jackson Hole on Friday and NVIDIA earnings next week. NVIDIA being the largest contributor from a market cap and from an earnings perspective to the S&P 500, and that being the conversation that is being discussed now about, has AI pulled back, which have been driving the market. My sense is that from an equity perspective, as you said, we've had 2 years of 20+ year returns. We, are up 30% from the tariff day low and 10%, as you said a couple of days ago, year to date. And we're at multiples that we really have only seen twice, certainly in my trading life, the first being, one very unique day during the pandemic and the other during the height of the internet bubble. So, what we need, I think, is stability to keep us in this range and going higher. And I think the bull market will remain intact. I think it will likely be driven by continued expansion in the AI trade, both in terms of infrastructure, buys and builds, data and power, picks and shovels, both margins going up and productivity going up. And I think it'll also be, very much supported by a decreasing interest rate cycle. But we're certainly in a more precarious position than we have been in a number of years from a multiple perspective.
Alli, I'm trying to figure this out, and I'm hoping you can help out with this. It's something I've been thinking a lot about lately, and it's this idea of a weakening consumer. And in just a few minutes, we're actually going to be speaking with the CFO of Cava, Tricia Tolivar.
Yeah, I heard that.
Yeah, Cava stock fell more than 20% in a single day last week because the company pulled back its guidance, essentially talking about a fogginess with the American consumer out there. At the same time, you have these high margin AI companies that are essentially just printing money, whether we talk about it from an NVIDIA perspective or from a Meta Platforms perspective, with margins such as those. What's the tension there in a world with a weakening consumer?
I think you nailed it. I think that bifurcation and that tension really exists. I think it exists in terms of goods and services. I think it exists in terms of consumer discretionary versus staples. And I think it exists in terms of, the vast difference in wealth and earning potential in this country. So what I am seeing in my high-end clientele who are looking at portfolios that are the highest they've ever been, and what I'm seeing in my own neighborhood, is the same. People are definitely more reticent to spend, both simply the cost of goods and the tariff implications, which we're starting to get wind of, are real, and people are going to have to make choices and decisions. The consumer has managed on all levels to hold up extraordinarily well. It's like the little engine that could. But it cannot last forever. And so I think that the next number of quarters, there is going to continue to be exactly what you said, which is this bifurcation in many ways that you slice the data, whether it's demographics, whether it's earnings, whether it's sector, between the haves and the have-nots.
What are the opportunities here in the market? How are you advising your clients? What's a safe haven trade right now?
Yeah. So look, I think all of this year, it has paid to be diversified, which has not been the case in a very long time. So you see right now, you see equities that have recovered and gone up, no matter which area you're looking at and which geography largely. You see gold, which has done its job at protecting, but also continues to provide upside. And you see fixed income, IG in the US trading at 25-year tights as people try to get ahead of the Fed moving down. So there are a lot of opportunities. However, each is very expensive. So I think the first is to continue to be diversified. And even though it feels like things are expensive, to continue to be invested. The second is to look for areas that still have room to grow from a relative perspective, whether that's healthcare, whether that's utilities, which can also provide some defense, whether that's financials, which again are trading high, but have a number of tailwinds from a regulatory and an interest rate perspective. So there most certainly are opportunities out there. But, what we've been finding, and we've been especially finding this week, is it may not be the time to play all beta or buy the S&P. This may be a time to be much more discreet and disciplined about what you buy and when you buy it.
We only have about a minute left, but I was talking to a colleague a little earlier, and she sort of explained the sense out in Silicon Valley right now when it comes to the AI and the AI race and what private companies are doing. And she described it as being on this roller coaster, but there's this lack of understanding about where we are on the roller coaster on the way up, if we're close to the top or not. Are we?
It's a really great question. And I have found in my career, being both on the East Coast and the West Coast, that there is always a difference in opinion, ebullience, and understanding of various technologies that are, coming out of Silicon Valley. I think that we probably remain in the second, early third inning. We are not even close to there yet. What I think the major difference is by people that live, traffic, and work out there is that they are thinking many steps ahead in terms of large-scale effects on data, on businesses, whereas I find that my clients and the people that I work with on Wall Street, outside of, let's say, the analyst community, are much more focused on sort of large language models, ChatGPT, and that's why I think there is extreme room to run in the next decade.
Alli McCartney, Managing Director, Wealth Management and Private Wealth Advisor at Alignment Partners at UBS. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower across the board. We're off session lows, but still looking at a 20-point drop on the S&P 500 index, now at 63.75. That's a decline of 0.3%. We've got the Dow down 122 now, a decline also of 0.3%. The Nasdaq Composite Index down 0.4. The Nasdaq 100 Index lower now by 0.5%. The Russell 2000 Index of small cap shares higher by 0.2%. The 10-year 4.32%, with the 2-year at 3.78%. Gold is down $9 the ounce, down 0.3%, while West Texas Intermediate crude is up 1.4% now, $63.60 for a barrel of WTI. Bitcoin down 1.6%, $112,540 on Bitcoin. Apple is raising the monthly subscription price of its TV Plus streaming platform by 30% to $13, part of a push to generate more revenue from services. Apple shares now lower by 0.7%. Recapping stocks lower, S&P down 0.3%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. There's been this renewed interest on rare earths and critical minerals as trade tensions between the U.S. and China have flared up. On that, we've spent quite a bit of time over the last few months talking about them with CEOs of companies in this space. Jim Litinsky over at MP Materials, whose company is set to have the Defense Department take a $400 million preferred equity stake. For more on rare earths, we're joined by Oliver Friesen, CEO at Guardian Metal Resources. It's a London-based metals exploration and development company. It's looking to bring production of tungsten back to the U.S. Oliver joins us from Toronto. Oliver, we've been learning a lot about rare earths lately. I think my geology 101 professor would be very happy with what we've been talking about. We had Gary Evans from U.S. Antimony on last week talking about the importance of antimony when it comes to ballistics. That was something that was new to me. Your focus is tungsten. Why is tungsten important? Because it's not classified as a rare earth.
Yeah, well, first of all, thanks for having me on, Tim. It's great to be here to talk more about tungsten. Funny enough, you mentioned antimony and the use within munitions and ballistics. It's the same reason you need tungsten. Tungsten is one of the most dense metals on the planet and also has the highest melting point. So it's been used in the production of munitions for decades and decades and decades. Now, that's just one small use case, but effectively, when you look at the entire critical metals supply chain, if even one of those metals isn't there, that can shut down manufacturing in the United States of America. So it's important that we focus on not only just rare earths, which, as you mentioned, are very important, antimony, but tungsten is definitely up there, considering the fact that we're very reliant on unfriendly adversaries for global tungsten supplies.
So I want to talk a bit more about your company in particular here. Which end markets, maybe EVs, defense, renewables, are really driving the most urgency for your business right now?
Yeah, I would say probably the most urgent use case is across defense. Because of that density, it's ubiquitous and it's very important in the production of munitions and things like tank armors as well. So really right now, given the geopolitical landscape, we're seeing a huge amount of a surge in demand and increasing demand across the defense industry for this metal. But as you pointed out, it's not just a defense metal. This is a metal that's used in a lot of other industries. Some that come to mind: aerospace, automotive, green energy is another one. It's a really important metal. It's almost irreplaceable in a lot of these technologies. So defense is driving the narrative right now, but at the same time, we're hearing major manufacturers in the United States of America are actually saying, we can't get this tungsten, and if we don't get it, we're going to be shutting down.
So the Pentagon in July provided a $6.2 million award to Golden Metal Resources. It's the U.S. unit of your company to perform a pre-feasibility study for a tungsten mine near Hawthorne, Nevada. Is this all the financing that you will need? Will you need more from the DoD? Will you need more from the government? Will you need to raise more?
Yeah, so it's part of the puzzle for sure. So that $6.2 million award that we've received from the Department of Defense, which obviously we're very grateful to the current administration for that award, will cover some of the key engineering work streams as part of that PFS study. But you're right, there are other expenditures associated with bringing that project and our projects into production. But concurrently with that award from the Department of Defense, we raised $21 million US dollars, predominantly with existing shareholders, almost all institutional. So we use those funds to then cover the other additional costs, and all the funding combined. Really, the focus is on delivering two key tungsten mines to the U.S. market, of which it's a metal the U.S. has not mined for over a decade.
Do you need government support when it comes to this project?
No, we don't. For instance, we acquired Pilot Mountain, which is a project that's received the award from the Department of Defense almost 5 years ago. So it was a much different market then. The landscape was much different. And even at that time, we acquired it because we felt like it would be an economic tungsten operation at previous pricing norms, which is around $300 what's called a metric ton unit, or about $30,000 a ton. That being said, the price, fast forward 5 years, China has completely banned the exports of all tungsten to the U.S. market. The price is closer to $50,000 a ton right now. But even at historic norms, this project and our projects, we believe, make sense. But obviously, the tailwinds we're seeing now across the federal funding landscape, but also permitting, gives us that much more confidence to push these projects forward and deliver mines in America to the U.S. industrial base and defense partners.
Oliver, let's talk a little bit about China. You brought it up here. How do you see China's dominance in the rare earth processing shaping your strategy here?
Yeah, no, it's a really good point, Nora, and I'm glad you brought it up, because what sort of sets tungsten apart from, the antimonies and the rare earths, as we've discussed, is the fact that the downstream processing capacity actually fully exists on U.S. soil. It's one of the very few critical metals of which the U.S. has the ability to actually take what's called a tungsten concentrate and turn it into actual usable finished products for defense and for industry. So the benefit that we have is that the only thing missing in the U.S. right now is a domestic mine source. We import in the U.S. all of our concentrates from other countries. And just to give you a data point, China, Russia, and North Korea combined represent 90% of total global supply of tungsten. I mean, just let that kind of data point sit in. But the thing that's missing right now in the U.S. is the mine supply. The processing is there. So as soon as we can plug in our 2 Nevada-based tungsten mines, you have a fully circular tungsten supply chain that exists within the bounds of the United States of America.
So where do you see demand for rare earth materials and all of that just more broadly over the next, say, 5 to 10 years?
Yeah, so tungsten specifically, we're seeing very, very healthy compounded annual growth rates across the different sectors that need it. Defense is certainly leading the charge right now. We're seeing the EU and NATO and the US, defense budgets up across the board. So that drives the demand for tungsten, as you can probably imagine. But also, we mentioned automotive, aerospace. These are all other sectors that are the demand for tungsten is increasing quite considerably. So we're seeing healthy growth across the different growth areas. And another use case that many of your listeners probably are not aware of is nuclear fusion. So not to be confused with nuclear fission, but effectively trying to harness the energy of the sun here on Earth. And the only metal with a high enough melting point to contain a nuclear fusion reactor is tungsten. So we see longer term considerable demand growth from this very important energy supply technology that should be coming in line in the next couple of years here, or next maybe decade.
One of the most read stories on the Bloomberg terminal this week was about the Trump administration, or President Trump's new brand of economic statecraft. Deals like, we might see with Intel, for example, or the Department of Defense deal with MP Materials. I mean, you could throw other companies into that as well. AMD and NVIDIA with 15% of certain chip sales in China going to the government, maybe even U.S. Steel with that so-called golden share that the U.S. government has with U.S. Steel. What's, in your view, because you've taken some money from the government this year, what's the difference between a deal like the one that MP Materials got, in which the DOD will take a stake, and the stake that the Trump administration is contemplating taking in Intel? Do you see a difference in those deals?
Yeah, for sure. So the MP Materials deal is pretty groundbreaking for the sector. And I think this is really a strong signal to the U.S. critical metals industry that the administration is serious about mined in America, which is really encouraging to see. So the MP Materials deal, there's lots of different parts to that. One of them is the price floor, the direct investment, and also the federal award as well. So we've received just an award. So this is money that we can go and use to fast track key engineering steps as part of our project. But what I'll say is that there's speculation that some of these unique and new sort of benefits that MP has had with this deal could be applied across the sector. So effectively, the doors have opened up for this type of deal to be done across the defense supply chain, but also the critical metal supply chain. So anyways, I think that all in all, it's a really strong signal to the market. It's a really strong signal to myself as the CEO of a critical metals company that the U.S. administration is serious about mines in America. And that obviously means that we have these projects at exactly the right time and trying to deliver this key metal to the U.S. market. We're
speaking with Oliver Friesen, the CEO at Guardian and Metal Resources. It's a London-based metals exploration and development company that's looking to bring production of tungsten back to the U.S. Oliver, you mentioned the door is open. Is your door open for an investment from the U.S. government where the government or the Department of Defense would actually take an equity stake in the company? Would you welcome that?
Of course, yeah, we'd more than welcome that. Like I said, all we have right now is the award from the DoD, which is incredibly important for the business. But you know, our goal here is to deliver these mines to the U.S. market. So anything that we can do to help get support from the current administration and across the industry, we will absolutely have that conversation. But the time is so critical right now. Like I said, the U.S. has no domestic mine supply, and we believe that we are the leading company when it comes to tungsten exploration development. So we're absolutely looking to have any conversation that will help us get to our goal quicker.
Are you having conversations right now about that?
I can't speak to that. What I can say is that you know, the award that we received from the Department of Defense was only about 3 weeks ago. So we're now really focused on getting that money and focusing it in the ground and towards creating U.S. jobs at our projects. So that's the focus right now. But obviously, you know, we're looking to tap into any tailwinds that can be available to defense and critical metals companies that are focused on U.S. projects.
Oliver, how do you navigate trade tensions and resource nationalism in markets where you operate?
Yeah, I mean, we try not to get too focused on that. You know, it's there's a lot of noise out there. There's a lot of movement across tariffs and you know, trade relationships right now. I think the main signal to our company and to myself as the CEO is that there's a huge push for mines in America. We want to see these metals actually being mined on American soil. So we try not to get too kind of caught up in the day-to-day. You know, we have a job here, which is to deliver these projects to the U.S. market. But you know, it's encouraging to see some of these things that I think really, once again, point to the fact that the current administration is very focused on mines in America and nowhere else in the world. So that's obviously a huge benefit to us as owners of 2 key tungsten projects that are both on U.S. soil and also in the great state of Nevada, which is a very mining-friendly place to be operating.
Oliver, yes or no, how quickly, or can, I should say, the U.S. become rare earth independent from China?
Oh, man, that's a good question. I mean, yes, we can. I mean, there's some great geology here. We need a huge amount of support from the administration, which we're seeing now.
Okay.
But we have to carry through. That's the biggest thing. We can't stop, start. If we have this same sort of support pushed forward over 5, 10, 15 years, the landscape will look a lot different. And the U.S. will become a lot less reliant on unfriendly countries for these key input metals.
Oliver Friesen, CEO at Guardian Metal Resources. Coming up next on Bloomberg Businessweek Daily, we've got the CFO of the fast casual restaurant chain Cava. That's next on Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower. Caution is prevailing on Wall Street ahead of Jay Powell's speech tomorrow. Stocks are falling. Bond yields are rising as a key factory report this morning raised concern that inflation pressures could dim the outlook for rate cuts. S&P is down 22, decline near of 0.3%. The Dow down 136 on the Dow, a drop of 0.3%. Nasdaq lower by 78, a decline of 0.4%. The Russell 2000 index of small cap shares higher now, reversing earlier losses, up 0.1%. We've got the 10-year at 4.32% with the 2-year 3.78%. Gold down $9.50 the ounce, down 0.3%, while West Texas Intermediate crude is up 1.2%, 63.46 a barrel, and Bitcoin now down 1.7%, 112,451 on Bitcoin. Sources tell Bloomberg Anthropic is nearing a deal to raise as much as $10 billion in a new round of funding. And Palantir Technology shares are higher today now after 6 days of losses. Palantir up now by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks, Charlie. One of the most read stories on the Bloomberg today, it's about the restaurant industry feeling the effects of inflation and a slowing economy, specifically about so-called fast casual chains feeling a little bit of pain of late. Shares of Chipotle and Sweetgreen have each sunk around 20% or more since reporting lackluster second quarter earnings. So too has the fast casual Mediterranean chain Cava. Earlier this month, Cava shares fell by a record after the company trimmed its annual sales guidance as skittish diners spent less on restaurant meals. Back with us for the CFO briefing is Cava's CFO, Tricia Tolivar, joining us from Baton Rouge, Louisiana. Tricia, welcome back. Good to have you on the program. Also with us is Nina Trentman. She is a Bloomberg News senior editor. She writes the Bloomberg CFO briefing newsletter. She's here in the studio. Tricia, I want to start with the consumer because on the earnings call last week, you said, quote, "We're operating in a fluid macroeconomic environment, and it's one that sort of creates a fog for consumers. During those times, they tend to step off the gas." Are things getting at all less foggy? Are they putting their foot back on the gas?
Well, certainly in the environment, it's still a little fog out there, and the consumers are doing the best that they can to navigate it. But what we're here at Cava is to make sure that we're delivering great value for the consumer with amazing cuisine and wonderful hospitality. And we believe when we do that well, the consumers want to keep coming back. So we want to do everything that we can to make sure that we are delivering a value for them so that if they're in a fog that they want and they want to enjoy a meal out, they want to come to Cava, and we believe we've positioned ourselves to do that.
Tricia, thanks for joining us. And to follow up on that, just wondering, why do you think your stock sold off so much after the results? Like, of course, I know you have strong comparisons. You grew a lot in recent years, so probably tough comparisons is a better word to say it. But why is the stock down so much?
Yeah, hard to say. The stock market goes up and the stock market goes down. We're always focused on the long term and certainly making sure that we keep in mind those strong results that we were lapping as we entered into this year. So over the last 3 years, we've driven traffic 20%, and our 2-year same restaurant sales growth were over 16%, and 3-year at about 35%. And so those are really strong dynamics and really reflecting the strength of Cava and how much the consumer loves the brand and wants to continue to be with us. So the reflection of the Q2 comps was more of a anniversarying or lapping over some of those higher results in the prior year.
And just wondering if we're thinking about the remainder of the year and also next year, of course, we'll see how that plays out. But I'm wondering, in how far are you prepared for a slowing economy in which also a consumer might make changes to their preferences in terms of where they eat, how much they spend, how often they eat out?
Yeah, one of the things that we do know is consumers love innovation, and certainly at Cava, we're prepared for that over the upcoming quarters. Coming soon, we'll have chicken shawarma in our restaurants, which is a hand-stacked, spit-roasted white meat chicken that is a new offering in our restaurants in September. And then closely following that will be our cinnamon sugar pita chips that are coming. Pita chips are a fan favorite for us, and we look forward to bringing them with a little side of honey to our guests later on this year. So those things, coupled with great service and incredible hospitality, really create an opportunity for guests to enjoy us and experience that newness that they so desire.
So the goal is basically to also have new menu items on the calendar so that you basically have something that draws people in, potentially offsetting any weakness you might see.
Certainly a robust calendar with culinary innovation, as well as continued execution and enhancements to our loyalty program, which are already planned for later this year. And right now, we've got some excitement in our restaurants. We partnered with Thaddeus Coates, who was a former employee of ours, to create a plushie that it's our pita chip plushie, which has created a lot of buzz and excitement. My mom down in Florida reached out to me and saw it on Instagram, which I was surprised. Nearing 80, she was in tune to what was going on, and she went to go find them in her market in Palm Harbor and was unable to find it. They were already sold out. So making sure we're culturally relevant with great cuisine is a combination that we think will be successful.
So I need to hear more about this plushie.
Is it a Labubu?
It is our version of a Labubu. So as I mentioned, we partnered with the creator of Hippie Potter, and he did work at Cava at one point in his career, and now he's a New York City-based creator. It's super cute. I encourage you to go take a look and see if you can find them if they're still left where you are.
Well, Tricia, it sounds like you all are finding really interesting ways to get more creative during this uncertain time period. What about any sort of price softening? Are you all thinking about bringing down the price point at all to meet consumers where they are?
Price has been something we've been focused on for a very long time. So over the past 5 years, from the end of 19 to the end of 24, we raised our menu prices about 15%, and CPI went up 23%. So we were 8% below CPI. And I believe, as you know, in the fast food place, prices went up during that time period over 30%. So we're always focused on creating strong everyday value for our guests, and we believe we're positioned to do that. So in 2025, we've raised menu pricing less than 2% at 1.7%, well below CPI for food away from home. And again, wanting to be thoughtful. At Cava, we have very robust restaurant level margins, and we want to make sure that we're reinvesting those margins back into team members and into guests. And one way we do that with our guests is to minimize price increases as much as possible.
Tricia, just talk to us a little bit about the impact of tariffs. I know that you import beef from Australia. You also import olives from Greece. So I would assume there's some price impact from tariffs. Will you pass these on to consumers? And how about price increases next year?
Yeah, so we do receive some items from overseas, and we have an excellent supply chain team that has really navigated this very fluid environment regarding tariffs and minimized the impacts as much as possible. But we have no plans for the rest of 2025 to pass along any price increases to absorb any tariff impact that we might experience. And we're looking thoughtfully at 2026.
I know it's a supply chain question, but you're the keeper of the books, so there's obviously a reason you're importing some of these things. Could you buy U.S. beef rather than import it?
We do buy U.S. beef, so we have a blend of U.S. and Australian beef, and there's no antibiotics ever added.
But could you exclusively buy U.S. beef?
We think it's important to have a balanced, scalable supply chain strategy, and having a very diversified base of suppliers with high quality ingredients is the best path forward for us. Always exploring what options are, but want to make sure that we're in a position for the long term to provide these high quality ingredients to consumers each and every day.
We're speaking with Cava's CFO, Tricia Tolivar, joining us from Baton Rouge, Louisiana. I want to talk a little bit about automation and ways that you can save costs within the restaurant. What can you tell us about ways you're exploring automation that consumers don't yet see, whether that's in the ordering process, whether that's in the delivery process and actually bringing that food to the consumer who's waiting for it, or if it's actually in the preparation process?
Yeah, so always looking at ways to make our team members' lives easier, to really be more efficient in our restaurants, and also creating a better guest experience. So one example in our Connected Kitchen platform of automation is leveraging our kitchen display systems, so KDS. And so we're adding those systems to over 200 restaurants across our fleet. And what that does is allow our team members to fill orders more accurately and efficiently. So creating a better guest experience and delivering your bowl the way you ordered it is super important. And that's something that we're focused on. And this should also increase efficiency in the restaurant overall. Another way is, even more simply and not automation, is making sure that we find ways to make things more efficient in the restaurant. So a little while ago, we got all of our pita chips. We used to slice them in-house to make our pita crisps, and worked with our partners to slice them ahead of time so that we remove that complexity out of the restaurants themselves. We also have explored and recently entered into an investment with a company called Hyphen to look at ways to automate our second digital make line. So we're in very early stages of that, but think of a world where the team member can prepare bowls and pitas at the top of the line, and there could be automation underneath the line to prepare those bowls, creating greater efficiency in the restaurant. We don't plan to ever do that on the front of our line. We think human connection is so important, and the way we leverage technology is to enhance the human experience and not replace it.
Tricia, you talked about all the ways that you all are trying to make the space more inviting for customers. Do you all have any plans for maybe celebrity partnerships or any sort of advertising and marketing in that sense?
In the first quarter of 2025, we partnered with Gabby Thomas on our campaign during that first quarter of the year, and really liked the opportunity for Gabby to talk to us about how she loves our food and how it fuels her, and highlighted our spicy lamb meatballs. So when it makes sense, we want to lean into different partnerships, but it has to be something that's really authentic and something that really means something to both us and the person that we're associated with.
Tricia, one more question from me. I'm just wondering, in terms of planned growth of the company, I know that you're expanding and you have upped your plan for new stores. I'm just wondering how you're thinking about construction costs on the back of tariffs, and also, are you hiring new people at this point?
Yeah, and so our new growth is very robust. This year, we expect to open 68 to 70 new restaurants. And much like the supply chain team, our design and construction team has done an incredible job navigating tariffs, and we're not expecting any impacts to our overall costs of our restaurants that we open. In some cases, they were able to minimize or offset some of the impacts by ordering, because of our strong balance sheet, leveraging our balance sheet to pre-order items to make sure that we weren't as exposed to tariffs as we might be. So team's done a great job, and as we grow, we anticipate that we will have needs to continue to support that growth as we move forward.
Tricia, always good to have you on the program. Thanks so much for joining us once again for the CFO briefing. That's Tricia Tolivar. She's the CFO of Cava. Also with us, Nina Trettenman, Bloomberg News senior editor. She writes the Bloomberg CFO briefing newsletter. She joins us here in the studio. Sign up for the newsletter if you haven't already, bloomberg.com/CFO-briefing. I'm Tim Stenovec along with Norah Mulinda. Let's take a look at some stocks on the move today. We're joined by Bloomberg News Deputy Team Leader for U.S. Equities, Jess Menton. Jess, if you're looking at stocks that are moving lower, wow, you got a lot to choose from.
There is a lot today. And of course, I have to talk about Walmart, just given it's among some of the top decliners in the S&P 500. Also a Dow component. So that's why you've seen that weighing on that. So that stock's down about 5%, so on pace for its worst day since February 20th. It's an interesting story here because when it comes to Walmart, retailers, a big tell on the consumer. So it did have a rare profit miss, and it was actually the first time in 3 years. So that did overshadow some of the strength we saw when it came to higher sales growth. But I wanted to point out, actually coming into this year, Walmart was trading more like a growth stock rather than a value stock. Before it reported its earnings back in February, if you looked over like a 12-month basis, it was up around 70%. So there's only two other Mag 7 stocks that didn't outperform at that time. It was like Nvidia and Tesla. So it's an interesting story just given where its valuation was coming into this year. And obviously back to school shopping season, second most important for retailers ahead, of course, the holiday shopping season. So looking at that, but even though you saw some of this rare profit miss and some of those higher claims, there still was a bright spot when it came to sales. But again, we'll still have others, Ross Stores reporting after the bell. We heard from Target earlier this week. And so keeping a close eye on that. And obviously it's grocery business and how important that is when you're those ties to inflation. And with even some of the tariff issues there, those still are going to take a while for a lot of that to show up in the company's report.
Right. And you really are seeing some weakness here in Walmart shares, down as much as 5.5% in trading today. But when you look at Wall Street, we are still seeing 43 buys, 1 hold and 1 sell. So it doesn't seem as though it's too much of a negative shock here quite yet. Talk to us about Cody. You're also keeping an eye there, Jess.
This is quite the drop. So it's down over 21%. The ticker symbol on this is COTY. And also, of course, it's on pace for its worst day actually since March of 2020. So this is an important company because it is also in the consumer type of retail space. So beauty and scents type of company. So to put into context for how it's tied to some of these, it's the Rimmel owner. And it actually posted a unexpected quarterly adjusted loss of 5 cents per share. Analysts over at Deutsche Bank, though, they were flagging how that company also faces some transitions here and setbacks from internal executive challenges, but they think that the company can kind of get over potentially that hurdle. But it was, of course, a setback and indisputable there. But that is one of those stocks really getting pummeled, actually down 21.5% right now.
We got to save some time for Cracker Barrel because I don't understand.
There's always time for that.
I don't understand the discourse here around this logo change, which is just has hit the stock so hard.
It really has. And I mean, I'm from the South. I've lived in New York for 15 years.
Is there anything more emblematic of the world we live in when, like, you know, offspring of politicians are getting involved in this logo dispute with a company?
It's true. And I always thought about, you know, when I'd be in the highways in Texas where you'd see kind of the rolling sort of the chairs they had outside the business.
Same in Virginia.
Right, exactly. But you did see this. So specifically the ticker symbol for Cracker Barrel, CBR. RL on this, and it's down actually 8% right now, on pace for its worst day since June 10th. But also, it's been on a string of losses right now, so extending those declines to a 5th straight day. So there's a wave of course, Tim was talking about that wave of social media posts surrounding that recent logo change there, and really kind of disrupting a lot of this. So the restaurant operator actually issued a statement back on August 19th, so that would have been on Tuesday, announcing that it would be launching a new campaign featuring country music performer Jordan Davis, while also tweaking its logo. So a little bit different here, probably unexpected for people. To Tim's point, a lot of people jumping in on this. And then Cracker Barrel actually was one of the top trending tickers on StockTwits. So among kind of the retail crowd as well talking about this. So Cracker Barrel didn't immediately reply to a request for comments for reporters that are on that story right now. But it's an interesting move here, and especially just given not even just today's losses, but the string that it's been on for a while.
I will say Michael Halen of Bloomberg Intelligence, he's a senior analyst. He says he does not expect Cracker Barrel to experience a prolonged negative reaction. Worries that the misinformation on social media and concern about the post will result in a situation similar to what happened with Bud Light are, quote, unfounded, according to a recent note that he wrote. A big thank you to Bloomberg News Deputy Team Leader for U.S. Equities, Jess Menton. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Speaking of stocks that are moving, taking a look at the major indexes, the S&P 500 down to 0.3%, as is the NASDAQ composite. The Dow right now down 0.3%. Taking a deeper dive into the S&P 500, consumer staples actually the worst performing sector, the worst performing industry group, down 1.3%. Consumer discretionary down 0.6%. Real estate down 0.5 percentage point. On the upside, only 3 industry groups in the green. They include energy, materials, and healthcare. That is going to do it for Bloomberg Businessweek Daily on Bloomberg Television. If you're sticking with us on Bloomberg Radio and on YouTube and Bloomberg Originals, we got a great program coming up over the next couple of hours. We're going to be on the ground in Jackson Hole, Wyoming. Michael McKee, Bloomberg News International Economics and Policy Correspondent, will be there. Also, Tracy Alloway, co-host of the Odd Lots podcast, is going to be joining us a little bit later. We're also going to do a deep dive on retail with a reporter and an analyst from Bloomberg Intelligence breaking down everything that happened this week with Walmart and, of course, Target and TJX companies as well. That's coming up next on Bloomberg Businessweek Daily. If you're sticking with TV, The Close is coming up next. I'm Tim Stenovec. That's Norah Mulinda. This is Bloomberg.